global mortgage lending market will reach $27.5 billion by 2031, and access to finance is generally on the upward trend, albeit expensive. While access to housing development finance has progressed significantly in Nigeria, access to mortgage finance has marginally improved compared to the needs of the market. Nigeria mainly operates a fixed interest rate for loans, but mortgage interest rates range from 6% to upwards of 20% per annum. And the main funding sources to service mortgage loans are deposits by subscribers across all tiers of banks, including the National Housing Fund of FMBN, commercial banks, and bond issuances. Non-interest lending is also on the rise. But according to Joburg-based Center for Affordable Housing Finance in Africa, Nigeria has the lowest home ownership level even amongst its peers, with Kenya at 75% and South Africa at 55%. Now it's clear Nigeria's macroeconomic fundamentals are putting particular pressure on the affordable housing market. Joining me to discuss the outlook for the mortgage sector is Oladapo Fakeye, Group Head, Strategy and Performance Management at the Federal Mortgage Bank of Nigeria. Thank you so much for joining me this morning, Mr. Fakeye. I guess the first question I ask for you is what the size of the mortgage market or industry in Nigeria is today, and how is it faring in light of recent macroeconomic trends?
All right, thank you for having me here. It's a pleasure. With regards to your question, the mortgage market is a subsector of the larger real estate sector in the country. And judging by the more recent figures released by the Nigeria Bureau of Statistics, within the first quarter of this year, the real estate sector contributed about 5% to GDP. And the second quarter, it's dropped slightly to around 4%. So that gives us an idea of what the real estate sector is. But more fundamentally, or more regarding the mortgage sector, statistics have shown that the mortgage sector contributes less than 1% to GDP in Nigeria. Now, this shows the extent to which we need to grow the market, because when you compare to other emerging economies, as you have mentioned, you have a range of between 30% to 50%, 60% as contribution from the mortgage sector to their economies. And for the more developed economies, you're looking at contributions of between 60 to 80%. So Nigeria's mortgage contribution to the GDP is under 1%. But rather than looking at this in a negative light, I think we can look at it as the wide opportunities we have to grow the market.
Yes, indeed. Thank you very much. So essentially what you're saying is that we're seeing quite a lot of money going into actual development and construction finance. So houses are being built, but affordability is being affected by low access to mortgages. So what exactly is happening? Why hasn't the market developed as fast? Is it because of interest rates or just awareness about what is possible to obtain in terms of a mortgage?
I could readily point to three major issues. One which has been historic has been the issue of culture, or the perception about debt. Culturally, in the past, we Africans have an apathy to disclose it to people that you build a house that is funded by debt or you're owing a bank or something. So that discouraged access to mortgage or the interest in mortgages. But thankfully that is changing, that perception is changing, and more people are more open to accessing mortgages. But the more fundamental issues seem to center around the legal and the regulatory framework that we have. We have experts in the industry will readily point to the Land Use Act that has requirements or procedures that must be followed for mortgages to be perfected, for title documents to be issued. We center around the responsibilities of state governments to grant consent to transactions related to anything related to property. So that creates some form of challenges. Thankfully also, we've had some recent initiatives to overcome such challenges within the market. And hopefully we're going to see more volumes. But I think probably what is also fundamental, as you have mentioned, is the issue of the cost of transaction, the cost of a mortgage. So interest rates hover up to 20% or around 20%. And of course, when you look at the household income and the GDP per capita for Nigeria, it presents itself as a challenge for most Nigerians to access mortgage loans, especially those in the open market because of the high interest rates.
Of course, interest rates have been a long-standing factor. Given the picture and outlook for mortgages, are there other types of home finance acquisition products that are out there? And is the Federal Mortgage Bank of Nigeria pioneering any of these new alternative financing schemes for buying a home?
Thank you very much for that question. So one of the major forms of addressing the needs for housing is a mortgage. We provide a funding for an individual to own a property and then repay over time. However, particularly with the Federal Mortgage Bank of Nigeria, we have been exploring and using opportunities to provide alternative options for Nigerians. So what we have presently a bouquet of products that not only addresses the need for home ownership, but also other types of housing needs that Nigerians need finances for. So presently we have products that speak to a rent-to-own process in which you access some of our products or some of the houses that we have funded as an institution, and you become a renter, and the rent that you pay pays down on the cost of the house. And after the rental period that has been agreed upon, the individual becomes a homeowner. One of the other needs that we find in the market and which we have developed a product to address is a construction loan. Statistics prove that upwards of 80% of the homes built in Nigeria are built by individuals who undertake self-construction incrementally over time. So you have an individual who is building his house over probably a period of 10, 15 years to completion. We have stepped to intervene by providing a facility that it's a construction loan. So instead of having the individual spend the number of years to build a house, you get a facility right now to build and complete the house, and then you can move in, and of course you repay over time. Some of the other needs we have addressed are regarding renovation. We know that a lot of Nigerians have taken the initiative to provide their own homes under stress, and of course they are facing the challenge of improving such houses. So we've come up with a home renovation loan that addresses that need. So for a maximum of ₦1 million, you get a facility to expand your house, to improve your house, or to upgrade your house. So the idea is to look beyond home ownership and to look at the various categories of housing finance needs of Nigerians, and not just having a one-track mind around that.
Very interesting innovation out there in terms of products available. Now, I've got to ask you, with the National Housing Fund, which FMBN champions, I know consumers have access to a one-time 6% priced loan in terms of a mortgage. How do those interest rates compare with your construction loan interest rate or your renovation loan interest rate?
So for Federal Mortgage Bank of Nigeria, we are being deliberate in maintaining our interest rates at single digit. Our mortgages attract an interest rate of 6%. The rent-to-own attracts an interest rate of 7%. But of course, we are an institution that intervenes on both the supply and the demand sides of the market. The demand meaning for mortgages and the off-takers to purchase the houses, and the supply side meaning we also intervene in providing funding or financing for the construction of the houses to be sold to Nigerians. So at the demand side, we maintain an interest regime of 6 to 7%. On the supply side, we maintain an interest rate of 10%. So where we do provide construction financing to real estate developers, both public and private, it attracts a 10% interest rate. Now, for cooperatives, because we have seen cooperatives as another very prospective avenue to deliver homes to Nigeria, because cooperatives actually congregate the desire of individuals to own their own houses. So for loans that we give to cooperative societies, we give it at 9.5%, just to maintain the single-digit interest rate regime for cooperatives. Thank you.
Thank you so much. Very fascinating conversation, Mr. Fakeye. It's now time for a short break, and when we return, the discussion around housing and mortgage finance in Nigeria will continue. Stay with us. You're watching Business Week here on Arise News. I've been chatting with Oladapo Fakeye, Group Head, Strategy and Performance Management at the Federal Mortgage Bank of Nigeria. So my next question for you, Mr. Fakeye, is recently PENCOM, the pension regulator, introduced a scheme that allowed pension contributions to tap into their pension savings for equity deposits against mortgages. Do you think this is likely to have a significant impact on the mortgage uptake by consumers?
Oh, definitely. And I think it's a good opportunity to commend PENCOM for taking up this initiative. It has been the aspiration of the market that we have that intervention from the pension scheme. And essentially it addresses the need for equity that is required for a mortgage, to access a mortgage facility. So the ability or the opportunity for Nigerians to access part of their retirement savings account provides the opportunity to overcome that challenge. And that means that for the individual, probably for a home that costs 10 million naira, if you could afford, you could access 25% of your retirement savings account, and it's worth that, it could address that amount. That means that you now have to only cope with the balance of 7.5 for a mortgage facility. For the Federal Mortgage Bank of Nigeria, years ago, we tried to address this challenge for Nigerians, coming up with the equity requirement by basically flattening our equity requirement to 10%. Previously, it was as high as 30% required for a mortgage facility from the Federal Mortgage Bank of Nigeria. But of course, so we saw that a lot of the challenges most Nigerians have is that they couldn't come up with the equity, the bulk payment you needed to put down on the table to access a mortgage. So for us, we're happy, and I think for the industry as well, we're happy with this initiative of having Nigerians able to access 25% of the balances in their mandatory retirement savings account for equity contributions. And just to also state that it's not just limited to the 25% in the mandatory retirement savings account. For individuals who have been making voluntary contributions to their retirement savings accounts can also access the voluntary portion of their retirement savings account additionally to the 25%. And Nigerians should also know that the guidelines also provide for a joint application by couples. So this is essentially going to increase the amount of funds that households can access from their pension savings to access mortgages. So that we have that interlink between the mortgage and the pension funds to improve home ownership in Nigeria.
Thank you. And I think that's a very important point, the part about joint applications, because one of the things I've wondered is you have to have had quite a stable income and been making regular contributions to your pensions for a while, for whatever that 25% translates to be able to cover your equity deposit. So I guess the question is, has anyone done an assessment of what the addressable market for those who have robust retirement savings accounts will be? Is that something that FMBN has looked at all?
No, not yet. The guidelines just came out a couple of weeks ago, and we're still trying to see how the market responds, how individuals respond to that opportunity. And of course, we do expect that a lot of individuals are going to respond to that opportunity, particularly for us that we have a fixed single-digit interest rate regime, we expect that there's going to be higher volumes of application coming to the Federal Mortgage Bank of Nigeria, which is a good development for us. Currently, we have up to 5.6 million people contributing to the National Housing Fund. And of course, that means the number of people who are contributors have access to, should have access to these facilities that we provide, not just the mortgage, but the other products that we provide as well. So we do look forward to higher volumes of applications coming, and hopefully we'll have that significant increase in the percentage of mortgages to GDP. So I think this is one of the triggers that we have been expecting and looking forward to growing and developing the mortgage market in Nigeria.
Well, thank you very much for answering our questions today, Mr. Oladapo Fakeye of the Federal Mortgage Bank of Nigeria. Interesting insights there on the mortgage market outlook. It's been great speaking to you.